I might be wrong, but I know it's going to go up because gold, as I said earlier, is for war. And it's not to say that gold goes through the roof because war is tomorrow. Gold is for security of states when tension goes up. And tension's going up. And it ain't coming down, is it? It's just not coming down. When's it coming down? How's it going to come down? It's not coming down. It's going up. It's only ever going up now for the foreseeable future.
Really?
What is going to happen to lower global stress and global tension? Nothing. So therefore, gold is going up.
Gold has been one of the standout performers among commodities this year, surging over 25% year-to-date and achieving multiple record highs. This impressive rally has been driven by optimism around potential rate cuts, substantial central bank acquisitions, and robust demand from Asian markets. The metal's safe haven appeal has also been bolstered by escalating geopolitical tensions and uncertainty ahead of the U.S. election in November. Central bank gold buying in 2024, led by India, Türkiye, and Poland, has significantly contributed to this surge in demand. This aligns with a broader trend observed over the past 5 years, during which institutional net gold purchases, particularly by central banks, have grown substantially. Clem, CEO of online blockchain and a prominent financial journalist, joined Outlook 2025 to share his insights on gold's strategic importance. Chambers described gold as fundamentally a reserve for war, emphasizing its critical role during conflicts and the rationale behind storing it in secure locations like Fort Knox. He also criticized historical decisions such as the sale of British gold under Gordon Brown's leadership, arguing that reducing gold reserves weakens a nation's ability to prepare for and withstand potential conflicts. Bitcoin and gold are two powerful contenders in the battle for the ultimate safe haven asset. However, next year could finally settle this long-standing debate. With its staggering $18 trillion market cap, gold might appear to have the upper hand. Historically, during periods of uncertainty, investors tend to shift away from volatile assets like stocks and cryptocurrencies, seeking refuge in more stable options such as gold, treasury yields, and bonds. Chambers suggests that while Bitcoin has emerged as fast gold and could play a role in strategic reserves, it remains an adjunct to the tangible value of gold. He advises holding significant quantities of gold alongside Bitcoin. We're about to explore the video, but first make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
You have to realize, and most people don't, gold is for war. The reason there's Fort Knox with gold bars there is it's a strategic reserve for war. Gold is for war. You can't fight a war without gold, because at some point in a war, you've got to pay with it. That's why America ended up with all the gold in the world at the end of the Second World War, because America wouldn't take IOUs and bonds. They'd take your gold, and therefore they ended up with all of it. Gold is for war. Now, Bitcoin can have a role in that strategic reserve because it's actually fast gold. So have some gold, well, a lot of gold, and Bitcoin is a useful adjunct. But ultimately, gold is for war. And Bitcoin is for fleeing. And it has its use case within that dynamic. But, the reason gold is going up is that governments are stacking it, because the global tension is going up, and therefore they have to. It's a strategic necessity because gold is bullets. It's a metaphor for bullets. If you want to buy bullets, you've got to pay in gold. Yeah, you don't think Russia's getting all those Iranian drones and all those North Koreans by not paying gold. Putin is not writing IOU on the bottom of a piece of paper and putting it in the post. He's paying in gold. Right? And all countries, apart from maybe America, in a war of any sort of scale, will have to pay in gold. So you have to have it. If you don't have it, you can't fight a war without gold. That's probably why Gordon Brown sold half of British gold, was because, socialists don't like the idea of going to war. So get rid of the gold and the country can't fight a war. Or it's much harder anyway. They're hanging by a thinner thread without gold. That's why gold is going up. China's not buying gold because they fancy to make some jewelry out of it or stick it in a few silicon chips. They're buying gold because they are gearing up for war. That's obvious, right? Over Taiwan, they're getting ready for it, and therefore they need more gold because you need to have that in the basement if you're going to fight a war. Now, they probably won't fight a war. And just because governments are buying more gold doesn't mean there's going to be one. But as tension goes up, a country and the people who are responsible for their security have to lay in more gold, because it's common sense that as you approach, midnight in terms of stress within geopolitics, you have to have more gold in the basement, and they're buying it up. And that's why the price is going. And the higher the price goes, it will represent a thermometer for global stress. And I'm not a gold bug. I've got a fair amount of gold in a vault in Switzerland, but that's because I'm a diversified portfolio guy. And I know it's going to go up. I might be wrong, but I know it's going to go up because gold, as I said earlier, is for war. And it's not to say that gold goes through the roof because war is tomorrow. Gold is for security of states when tension goes up. And tension's going up. And it ain't coming down, is it? It's just not coming down. When's it coming down? How's it going to come down? It's not coming down. It's going up. It's only ever going up now for the foreseeable future.
Really?
What is going to happen to lower global stress and global tension? Nothing. So therefore, gold is going up.
Gold prices experienced a significant 9.3% correction following Donald Trump's victory in the November 5th presidential election. Clem Chambers observed that many view Trump as a figure capable of waving a magic wand to address global conflicts, such as the Russia-Ukraine war, fostering hopes that his leadership could bring peace and stabilize markets. In addition to gold, silver prices have gained momentum, driven by the onset of U.S. monetary easing and increasing demand for renewable energy technologies like solar panels. Silver's unique dual role as both an industrial metal and a financial asset underpins its steady growth trajectory, with industrial applications accounting for more than half of its demand. This year, silver prices have surged by approximately 20%, and projections indicate a continued rise, 7% in 2025 and an additional 3% in 2026. The upward trend is fueled by robust demand outpacing supply growth, bolstered by strong tailwinds from technological advancements and financial markets. Chambers highlighted the unique roles of gold and silver in times of crisis. Gold is a business-to-government asset, primarily acquired by central banks as a strategic reserve, while silver is a business-to-consumer asset accessible to everyday people. Now, let's redirect our attention to a video.
Well, I think a lot of people are seeing Trump as and he puts this forward, and now he's got a gigantic following that believes that he will wave a magic wand, for example, in Russia and Ukraine, and it'll all stop, January the 31st or whatever. And I hope so. I really do. Because, I don't really want my gold to be $6,000 an ounce. That would be nice, but I don't really want that. I'd much prefer other things to go up and gold to go down. Although a lot of people here will be watching it and saying, I want gold at $6,000. I don't really want that kind of global stress in the world. But it's not what I want. It's what happens. And I think that while there's a chance that Trump will actually will fix Ukraine and Russia, I think it's a bit of a long shot. It's not odds on by any means, and I think people are treating it as if he's going to wave a magic wand, and I don't think that's going to happen.
Okay, so what's your price outlook? Worst case, best case, 1 year, 5 years. Where do you think gold will be?
It's just going up. It's going to go to 5,000. I don't know how long that's going to take, but it's going to go to 5,000. You don't need a war. You just need increasing global tension, because if you are the finance ministry of Italy or Greece or Turkey or Saudi Arabia or India or Kathmandu, you got to buy more gold. As tension goes up, you've got to buy more gold. Now, if suddenly everybody started singing Kumbaya and United Nations had a jamboree and everybody was friends, gold will go down. And as tension fell, it will go down and down and down. And down and down and down and down and down and down. Then if everybody decide that, the second coming had occurred and it was all happy from here on in, why would you need Fort Knox? You would just sell it, wouldn't you? And it would go to whatever the demand for gold is for circuit boards and jewelry and Rolexes. I buy silver on the same purpose, but it's a different critter, okay? Right. Gold is B2G, business to government. Government buys it off people that dig it up. That's the major customer in many ways. That's the current customer that's driving this, right? Silver is B2C. Silver is for, the man on the street. You can't buy a chicken with a bar of gold, but you can buy a chicken with an old quarter, silver quarter. If you want to have precious metals as a hedge against increasing tension, or just because you think the end of the world's coming, like a lot of people do always, you buy bags of old silver American coinage, because you could take, a dime out and buy something worth a few dollars. And therefore it makes sense. But for governments, it's too light. And this is a story that I always tell to give people perspective. When the Americans retreated from the Philippines in the Second World War, they put the gold in a submarine or a battleship. I can't remember which exactly. They threw the silver in the bay. So that tells you all you need to know.
Gold has surged in value due to global tensions, central bank acquisitions, and geopolitical uncertainties, positioning it as a strategic reserve for nations amid rising stress. On the other hand, silver has benefited from growing industrial demand, particularly from renewable energy sectors like solar panels, coupled with the effects of U.S. monetary easing. Both metals serve vital functions in financial markets and industrial applications. However, their prices are expected to continue rising in the coming years, driven by strong demand and limited supply growth. What is your stance? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.